you could see a print of well over $5 trillion. It could be 10 trillion, it could be 20 trillion. We don't know, but it could be a very big print. And that's why having Bitcoin to me is so important, because it prevents you from getting hurt by that print, because Bitcoin and gold and other assets will rise dramatically along with that expansion of the money supply.
Bitcoin is ultimately a rising asset over the course of a long period of time. If you look at where Bitcoin will be in 10 years, what we expect it to be in 10 years, well over $1 million per coin, well, you've made 10x on that investment.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Today, we're diving into expert analysis from James Lavish, an institutional investor and crypto insider, who discusses why Bitcoin is not just a hedge, but a lifeline against an impending financial storm. As Lavish explains, the U.S. could soon unleash a multi-trillion-dollar monetary expansion, anywhere from $5 to $20 trillion, in response to a future systemic crisis. The implications of such an event are staggering. It would devalue the dollar, destabilize markets, and fundamentally shift how we view monetary policy. In this environment, assets like Bitcoin and gold could soar. Lavish emphasizes that Bitcoin's scarcity and independence from government manipulation make it a powerful protection against what he calls the big print. If you're concerned about inflation, debt spirals, and financial contagion, you won't want to miss what Lavish has to say.
You just don't know what's going to happen that could trigger something like that, where you have a crisis and you have a lockup in the overnight rates, and suddenly the Fed's got to come in and splash liquidity in the markets to save it. That's not the big print, though. The big print is when you have a complete, absolute meltdown from some unforeseen event, and you've got to borrow so much money at the U.S. government level that there is absolutely there's no choice but to hit the markets with a money bazooka in order to shore them up and make sure that there's stability in the treasury market, because it's really ultimately all that matters to the U.S. government is stability in the treasury market, so it can keep borrowing, so it can keep operating. And so that's what it comes down to. That's another first principle answer, though, is that that's all that matters. And so if that happens, you could see a print where the Treasury and the Fed step in and expand the money supply and use basically printed money to go into the markets and buy assets in the markets, whether it's treasuries or mortgage backs, relentlessly. You could see a print of well over $5 trillion. It could be 10 trillion, it could be 20 trillion. We don't know, but it could be a very big print. And that's why having Bitcoin to me is so important, because it prevents you from getting hurt by that print, because Bitcoin and gold and other assets will rise dramatically along with that expansion of the money supply. And that's kind of the point. Assuming that there's even 21 million coins. I mean, there's estimates of 3 or 4 million that have already been lost. People lost their keys, their access, and so those are gone. So, but still, at the smallest amount, it's going to be at least 5% of the total available supply of Bitcoin. Why is that important? Well, like you said, because Bitcoin is ultimately a rising asset over the course of a long period of time, if you look at where Bitcoin will be in 10 years, what we expect it to be in 10 years, well over $1 million per coin, well, you've made 10x on that investment. So if you bought 1 million Bitcoin at, you can do the math, 1 million Bitcoin at whatever it is, say $100,000, and then you multiply that out. This is such an extraordinary amount of money that you can turn around and you can pay down the public debt. How much you can pay down, how much depends on how much you're willing to sell, or you can turn around and borrow against it. You can borrow against that Bitcoin, and it would be collateralized for investors, and that gives them a stronger bond to float, which means that they get an advantageous interest rate on it, which means that they're not borrowing it at as high of a rate that they currently are, with really no backing to these things except printing more money, which is bad. Charles, here's your first principle, is that when you float a bond that is not tied to an underlying asset, has no collateral to it, then you're trusting that it's just going to be paid back off of future cash flows. of whoever you're selling it to. And if you don't have enough future cash flows and you're in the United States Treasury, what do? Well, you just print more money, and you buy back bonds in the market to free up capital so people can turn around and buy the bonds that you're floating. And so you're diluting your capital base. You're basically saying that your dollar is worth less than it was when I issued these bonds. So it's going to be worth less in the future. And so when I turn around and pay you back, you're going to have dollars that are worth less than they were before. On the flip side, if you have something like Bitcoin and you have these, and it's secured by this underlying asset that's rising, well, you may be able to get an advantageous interest rate on there. You may be able to, if you have it, there are things you can do, but you're going to wind up being able to borrow against it at a better rate, and that's important because that'll bring down your debt or bring down your deficit, and it'll bring down your debt, and that's what currently Scott Bessent is so worried about. The new Secretary of the Treasury is that they've got such a high interest rate cost annually. It's over $1 trillion that it's just adding to the deficit and adding to the debt every year. And it's called the debt spiral. And they've got to find a way to stop that. And so doing this would be a good first step. The second step is important, is that there's a proposal that's coming about of issuing Bitcoin bonds. And that would be you buy a bond, and for that you get the mix of getting return of capital and some Bitcoin or a Bitcoin upside on top of it through the way that you would get a yield on that investment. And so that there would enable the Treasury to turn around, buy Bitcoin for its balance sheet, and then hold that Bitcoin and then make profit on it over a long period of time, and ultimately end up with more capital than they borrowed. And so that's the idea there. And then the investors could get the upside of the Bitcoin. And so, it's a super interesting idea, and I'm interested to see, and hopefully it'll be introduced to Congress and the Senate at some point here, and they would consider it. So we'll see how that works out.
Bitcoin price in 5 years from now, 2030.
2030. I'm going to say that it's already touched $1 million. Whether it stays there, I don't know, but I'm going to say it's $700,000 or higher.
James Lavish paints a clear picture of why Bitcoin is essential in today's volatile economy. With the U.S. debt spiraling and over $1 trillion in annual interest payments, a massive liquidity crisis seems not only possible but inevitable. The U.S. Treasury and Federal Reserve will have no choice but to print historic sums of money to stabilize the system. Bitcoin, being non-sovereign, finite, and decentralized, stands to benefit immensely. Lavish predicts Bitcoin could reach over $1 million per coin in the next 10 years, driven by increased demand, diminished supply, many coins are lost forever, and institutional adoption. He discusses the possibility of Bitcoin-backed bonds, and even the U.S. government borrowing against BTC reserves as a strategic asset. Unlike fiat bonds, Bitcoin-backed instruments could attract global capital at lower rates, reducing debt burdens. He also explores how stablecoins, built on Bitcoin infrastructure, are reshaping global finance by eliminating middlemen and driving dollar dominance internationally.
To tell you simply today, in the current environment, what is concerning is that the valuations of stocks have gotten way ahead of themselves versus just the gross domestic product, the GDP of the country. And now the GDP has been revised down, so the valuation of the stocks they've gotten way ahead of themselves. And so that's a concern. The only
gives it immense strategic value in the coming decade. Lavish's forecast? Bitcoin touches $1 million by 2030. If you're not already thinking about Bitcoin as a strategic long-term asset, now's the time to start. Subscribe to Daily Bitcoin Trends for more expert insights from the front lines of global finance.